You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors.
All right, everybody, welcome to our basic training. This week's segment began by a question we got during the mastermind last week with Dan and his crew. This came from Gain, or maybe Gone. They wanted to know, I heard you mention on the network recently that there are no economic reasons to exercise an option early, except for a few instances. Why is that? I thought options were designed to be exercised at any time. And what are those instances? Thanks. So we touched on this last episode back on the mastermind. For you guys listening to this now, 2 weeks ago, for us right now, live 1 week ago. But we thought it was worthwhile revisiting those scenarios on, Dan, effectively when you should and should not exercise your options. And the latter part of that is easy. When you should not exercise your options is really pretty much 99.9% of the time. You should not exercise your options early, really ever, except for these handful of examples we're going to give you right now. Let's go to example one, Dan. We're going to capture a dividend. We're going out to XYZ. And XYZ, in our example, trading for $10. You're long, a call expires in a month. It's on the 10 strike as well. So it's an at-the-money call right now. So you're long a 1 month 10 strike call. In our example, it's trading for around 50 cents. You get a nice amount of juice for that call. You're holding this option. All of a sudden, XYZ declares a dividend. It's going to be payable next week in the amount of 25 cents per share. Dan, should our listeners out there, should they exercise or should they not? It could be a little fun game show you can make on the show. Exercise or not. You hit the button, no whammies, all kinds of fun. What do you think?
Let's see here. So if XYZ is trading for 10, you're long a 1 month 10 straight call. It's currently worth 50 cents. Yeah, no exercise in there.
No exercise at all. Why, sir?
Because you're giving up 50 cents worth of time value, and the dividend is only 25 cents. So you're gonna lose 50 cents, gain 25 cents. So you're down 50 cents.
Yeah. Not a good do, as you used to say, over there on the trading floor. Yes, Dan is exactly right here, listeners. He wins our first round of exercise or not, Dan. Fabulous prizes. You're going to move on to the showcase. You can win a camper. Does that sound exciting?
Woohoo!
An RV. All right. But why is that the case, listeners? Again, Dan mentioned it. You're exercising your call. Now, what happens with that? You exercise a call. You're effectively selling it for the intrinsic value, whatever meat is on that bone. In our example, there is no intrinsic value. It's an at-the-money call. So there's no meat. So let's say the stock was trading at $10.10. There would be 10 cents of intrinsic value. Nope. You are selling it for effectively nothing in our example. So a 50-cent option, you could turn around right now and selling in the marketplace for 50 cents, you are effectively giving away for nothing. That's why we say there's almost never an economic reason to do this. Unless in this example, that dividend was pretty juicy. Remember, call owners don't get the dividend, share owners do. So in this case, if you were to exercise and transfer your calls into shares, you would now be getting money. But in this example, you're getting 25 cents. So remember, you have one call that's on 100 shares. So that's $50 that call would be worth if you sold it in the open market versus 100 shares at 25 cents a share. You'd only be collecting $25. So you net out $25 there. So not a good do, as we used to say. Let's go to example 2 now, Dan. Same underlying, everything else is the same. XYZ is trading for $10. You long a 1 month 10 strike call, trading for 50 cents. Now XYZ comes out, Dan, and they declare a monster dividend of 75 cents per share. Once again, round 2 of exercise or not, Dan. This is for the camper. This is for all the marbles. Do you exercise or not, sir?
Well, this one ends up having some value because when you exercise, again, you give up the time premium. So you're giving up 50 cents, but you're getting a 75-cent dividend. And so you make out 25 cents a head.
Ding, ding, ding. Dan wins the RV. Now we have to ship it down to Frankfurt. It's going to be expensive. Reach out to our producers, Dan. We'll work out the logistics for you here. But yes, Dan is correct there, listeners. It all really depends at the end of the day how much your option is worth, how much time premium is really there. In this case, it's an at-the-money option, so all the value is time premium. And then B, how much the dividend is. And it's really a very simple equation. If the dividend is worth more than what you're surrendering by exercising, then it's worthwhile to do it. If not, it is not, which is why we always say this is pretty much the prime example of when you should exercise an option to collect a dividend. In this case, you're giving up 50 cents worth of the value, but you're collecting 75 because you now own those shares. Bam, it's a no-brainer. You're making 25 cents. You're going to do this trade all day long. And now let's get to some other weirdo examples, Dan. Because once you get outside of exercising the calls to capture a dividend, things get very scenario-specific. On the put side, there are only a handful of scenarios where it really makes sense to exercise a put. In this case, it wouldn't even be early. In our example, this is pretty much right at the tail end. Let's talk about you have XYZ, again, closes at $10, this time on expiration Friday. So you're long a 10-strike put. It's expiring today. So guess what? Your 10-strike put that you owned from whenever, who knows, is expiring worthless because it didn't expire even a penny in the money. So everything pinned exactly, your options are going out worthless. Remember, though, you do have that little bit of wiggle room in the after hours right after the bell rings. And in that time frame, in our scenario here, XYZ announces some terrible news, whatever it is, CEO stepping down, reduced guidance, whatever it might be. Stock gets crushed down to $8 immediately in the after hours. Now, what do? That put was worthless. Does it make sense now to maybe exercise that thing and get short some stock? And the answer in this scenario is heck yes. Stock drops to $8 in the after hours, so you can buy all you want for $8. If you exercise that put, remember that allows you to sell the stock at any time, including in that short window after the bell on expiration Friday, and sell the stock for $10. You can immediately buy it back in the after hours for $8, and chances are it might drop lower in between them. So yes, you're going to do that all day. That is now an option that was effectively worthless is now worth effectively $2. So yes, in that scenario, it does make sense to exercise. Dan, what are your thoughts on that scenario? And can you think of any other scenarios where it makes sense to really exercise your puts, sir?
Yeah, I mean, one little nuance on this example is I would, obviously make sure you know when the last moment you can exercise is and make sure you know where to click and who to call or whatever it is you got to do. And I would buy the shares first because after hours trading can be very, very illiquid. And if you exercise, 50 puts, but it turns out you can only buy, 10, 2 shares at 8 and 2 more at 9 and the rest at 10, or higher, then that's no good. So you have a little bit of that legging execution risk. Other things too is now they actually have something called interest, which is a rather new phenomenon here for many traders.
What is that term? I'm not familiar with that, Dan.
Yeah.
What is row again? I've totally forgotten. I blinked on it.
You have to read some history books to know what that is. But and so market makers will exercise deep in the money puts that have little or no time value left. And there's some math behind it, but all you really need to know is when puts are super deep in the money, if market makers are long them, they own 100 shares of stock against them. that they're effectively paying interest on. So they would prefer not to tie up all that capital. And so they tend to exercise those early.
Yes, we used to always say on the trading floor, do the hard leg first. And in that case, buying the stock, Dan is correct, is the hard leg. See how much you can get off. If you can get it all off at $8 or maybe even below, then yeah, by all means, exercise all your puts. Otherwise, exercise accordingly. But those are some of the few scenarios, listeners, where it makes sense to exercise early. So congratulations. You win our game, listeners, of exercise or not. Maybe we'll jazz up the name, Dan. What do you think? Exercise or die? How does that sound?
How about squid exercise?
Squid exercise. That sounds like a whole other thing. We're doing some sort of acrobatics for squids, but interesting stuff out there.
Yeah.
We'll workshop them here on the show, listeners. But now it's time for us to workshop some of your questions. It is time for the mail call.
Mail call. Time to look at questions submitted by our listeners.
All right, everybody, welcome to the mail call. See how many of you we can squeeze in here before Dan has to lickety-split. Let's go out to Lambert first, maybe Lambert. They want to know, is there a particular time of day that is the best or most popular, or you just prefer to trade your options? A lot of people like to put stuff on in the morning. Sometimes if they're busy, they'll set some of their stops and things ahead of time at night before. I don't love to do that because things could move, obviously, in the after hours and before the open. That could make your levels you set the night before a little bit crazy. But this is also a good question. I'm going to bring it up tomorrow, Lambert, so make sure you check out our option block show. We do it with the Flow Master, our buddy Mr. Henry Schwartz. He's the guy who analyzes all the options flow, has done so for years out there. He might have some interesting nuggets and light to shine on when people are executing their trades. And it's going to vary, obviously, by underlying. Even on the 0-day side, it's going to be very interesting nuggets there. So it might be an interesting grist for the mill. So Lambert, everyone else, make sure you subscribe to the full network so you can check out the option block. I think this might be fun to discuss on the option block tomorrow. That said, as this question came in, we actually were also sent the results of a survey that the folks at Forex.com did. They conducted a survey with 3,000 traders globally in July of this year, and they asked them a bunch of questions about when they like to trade. Now, they say across all assets, so fixed income, FX, equities, all that kind of stuff. They don't mention options specifically here. They break them up by underlying in this category. And their finding was similar. The first hour of the trading day is the favorite time for people to execute trades globally across all asset classes. So the first hour of the day, they said traders with the most experience were also the most likely to trade in the first hour of the day. And those with under 10 years prefer the last hour of the day. So kind of interesting there. FX folks, this is a Forex site after all. FX folks were also found to like the first hour of the trading day. So a little bit of insight there, Dan. I think a little bit more digging to be done. What are your thoughts on, is there a time of day you like to trade? And what do you think is, as he puts it, the quote-unquote best time to trade options, sir?
Well, I mean, I'm looking at the market all day long. My guidance has always been, the first at least 15 minutes and the last 10 minutes of the day, everything is pretty illiquid. You get some unpleasant surprises sometimes, or pleasant ones, but I don't like surprises. If you're closing a trade, then any time's a good time to trade. And Mark, you mentioned that you don't. I think you said you don't like to put in GTCs because stuff can move overnight. I used to share that philosophy. I've kind of changed it a little bit, and I like for closing orders. I've come to like GTCs because of that. Because on the open, sometimes something could move in a weird way where the only time you're going to get filled on that all day is in the open because there was some order imbalance. And so I've been known to do that. And, I'll check the pre-market trading of the underlying first. And if I have to move that GTC order, I will. But yeah, I don't know. That's my 2 cents.
think a little bit more wiggle room, you're right, when you're closing, because you already have your set level, right? You know what you put it on for, so there's a little bit more wiggle room on the closing side. So I suppose if we carve it up by opening and closing, again, that's why that question is so loaded, because there's so many different ways you can come at it. But look forward to that. I think we're going to talk about it if we have time tomorrow on the option block there, Lambert. I know, Dan, you got to run pretty soon. We'll get you out of here on this question from O'Malley. Kind of an interesting one. He wants to know quite simply, how long did you guys take to become pro traders? Well, I guess you can argue that we're always learning, always evolving. So in that sense, it's been a multi-decade process. But practically, how long did it take for someone from when I came out here to Chicago and decided I was going to do this till someone was willing to put capital behind me and I actually made, a living as a quote-unquote trader? I got paid as an assistant trader too, but official, full-time, on a badge trader, that was about a year. That was usually the process out here in Chicago. You came out here, you signed down with one of the market-making firms, and they usually had a well-established training program where you went out, you worked in the pits, you clerked, you learned how this stuff worked, and then the after hours, you studied, you trained, you raced on fractional flashcards, all kinds of stuff, because you had to be quick. So all that kind of stuff. You did theory. They would bring in guest speakers. It was very intense, and this was for a full year we did this. That was our job. Our job was to learn how to become awesome, super-powered traders. And so when people ask us all the time, how long does it take? Obviously, you're in a different boat. You're on the retail side. You probably have a day job already. You don't have time for a second one, so it's going to be a little bit longer. So just bake that in. The pros usually took about a year, and even then, you're still just a baby trader. You have to learn the ropes. You have to learn what you're doing. You have to learn all the mechanics. You have to learn, risk management, all these things. So that's just to get started out there as a year. And then, of course, the evolution never ends. But Dan, you're out there training folks all the time. Folks want to know, for you, what was your process? How long did it take you to become a pro trader, sir? And what are you seeing now on the flip side when you're training people?
Yeah, my process was a little bit different than Mark's, I think. I didn't get hired day one as a trader trainee. I just, I went to explore what career paths there were on the trading floor. And so I did it old fashioned. I went and knocked on doors and took whatever job I could get just to get on the trading floor. And then, it took me a little bit of time to figure out what was going on. Is this even something that's viable for somebody whose uncle isn't a trader already? So I worked some kind of BS jobs for the first year for sure, and then maybe even the first 2 years. But then the last 2 or 3 years, I was a trader's assistant, and I shadowed a trader, and I knew exactly everything he was doing at any given moment. And I had to, the way our relationship worked, I had to know everything he was doing because I had to be able to answer questions on the spot. So after 4 years of clerking, probably less than that, I don't remember when the actual, fulcrum point was, but I knew what I was doing. And then I went and I got a job as a trader. So long story short, my learning process was a little bit less formal, a little bit sort of self-carved. So I don't know, 3 years maybe, I guess, is the answer.
And now that you're educating people professionally, sir, how long do you think it takes to spin them up on the retail side these days?
You get out what you put in. We had one of the guys at our mastermind who, I forget now. I want to say he's been at it maybe 9 months, and I was massively impressed with how much he'd accomplished in that time. And then, people come to me after 10 years of trading and they, figure, oh, maybe I can get a little better. And sometimes they need a ton of work. They have these terrible habits. There's a bunch of stuff that they never even looked into learning that are super important. Greeks or volatility or whatever. So it varies. But I think if you really apply yourself, you get a good coach and you put in the effort. I don't know. You can do it in a year for sure.
All right, everybody, that music means Mr. Dan has to run. I lied. I'm going to stick around for one more question, listeners, because I like you folks out here. It's a quick one here, but Dan's got to run. So, Mr. Dan, before we go, if folks want to hit you up about that topic, maybe they want to be lured to the dark side, they want to become pro traders themselves, sir, where should they go? What should they do?
Sure. We'd love to have you at markettaker.com, 2 T's in a row, and join free, become part of the community, and use our free resources there.
Check him out, markettaker.com. Don't forget the second T for Theta, listeners. You can go over there, harvest yourself a little bit of Theta yourselves. Don't forget the second T, and we're going to squeeze in one more because you folks are so nice, sending in so many questions here all the time. I want to make sure we get as many of you on the show as possible. And I just deleted it. There we go. Let's get it back. All right, let's go to Candy Bat. I like that handle. Candy Bat says, I just discovered OBC. I'm a noob. So what other shows should I be listening to on the network? First off, you're hard on yourself there, Candy Bat. You've taken this first proactive step, so ballyhoo for you. You realize you need to learn more, but you're just intrigued about these products. You've done some of the initial legwork, so you should pat yourself on the back for that. OBC, you can't go wrong with this show. The show's been running for over a decade. It is very much the flagship options educational program out there. I put this up against any other show from an educational perspective out there. It's one of the longest running as well. I'm hard-pressed to think of anything that's been running over a decade. Nothing's been running as long as our full network, obviously. That's over 16 years. We created the options podcast space way back in the primordial ooze days of beginning of 2007, pre-iPhone, all that fun. But your other part of your question is what other shows should you be listening to? Well, my first go-to suggestion, I often said it was the sister show to this one, is Options Playbook Radio, a.k.a. OPR. That show right now is on hiatus. Brian is kind of between gigs at the moment, shall we say. But that doesn't mean there isn't a great archive of hundreds of episodes that are mostly evergreen for you to go check out on that show. So I would definitely, if you're going to invest the time to consume the full catalog of OBC, and I see the numbers. I know how many people are doing that. You're coming in, you're discovering OBC, you're going back all the way to episode 1. That's why for the last 2 years on our network, episode 1 of this show from over a decade ago has been our number 1 episode. It's fascinating. But a lot of you are going back, starting from episode 1, working all the way through. If you're going to do that, you should also do it with OPR. Again, OPR are very bite-sized, 15-minute episodes usually, so you can sneak a couple of those in on your commute or while you're working out, and bam, now you've learned something you didn't know before about the world of options. So if you do the full OBC catalog and you do the full OPR catalog, you're sitting pretty from an options knowledge perspective. And then, of course, the rest of the network is there to fill you out wherever you're comfortable. So if you're more in the active trading side, you want to see what's going on in the market day to day, you want to talk about unusual activity, analyze some trading, do a little bit of strategery as well. Then, of course, the option block I mentioned, we're coming back tomorrow with the Flow Master to tackle more about that question from Lambert, which was a good one. That one runs twice a week, Mondays and Thursdays. We do that now with our friends over there at SIBO. That's a fun one. And then if you're into, let's say we were talking earlier on our survey question about energy options and commodity options. If you're into that stuff, you're onto the futures options front. This Week in Futures Options every Thursday. These are all, of course, available on demand as well. So if you just subscribe to the On Demand Network, you'll get them all. We talked earlier about volatility views as well. That's every Friday. That gets onto the volatility space. Asset managers and advisors, we have the advisors option. I wouldn't normally recommend that for listeners of this show, but that said, advisors in many regards are just as basic when it comes to options as many of our basic retail listeners. So there is a strong educational component to that show as well. So that could be intriguing, especially if you skip around to the Options 101 segment on that show, which we usually do every episode. A lot of great education there. And then, of course, if you're into crypto and crypto derivatives, you have the Crypto Rundown. So we do parse the option space in a lot of different ways, typically by product category. So those are the places you're checking out on the network. And then, of course, if you want to go above and beyond, you want to get, let's say, custom tailored answers to your options questions, that's where the pro comes in. You're probably not ready for that yet, Candy Bat. But once you do graduate to that level, theoptionsinsider.com/pro. We have a pro Q&A session every week with some of the best minds in the world of options. We just had Tony Saliba on yesterday, a.k.a. the original options market wizard himself, just tackling your questions. A lot of you asking questions about butterflies. He loves those. So they just come in just to answer your questions. It's awesome. These people have many other things they could be doing, and they choose to come in to answer your options questions. It's pretty awesome. And then, of course, we have options oddities out there for you folks, giveaways, all kinds of fun. So I think once you go the run of the on-demand side, you get your feet under you, your sea legs from an options perspective, and now you want to graduate, of course, I think the pro could really help you on that next level, because only you know what questions you have. And if you bring them to us, we can find the best people on the planet to answer them for you. It's a pretty cool thing. You know, we put this whole network together. We have some pull now. We can get people to come in to answer your questions. So if you want to hear, let's say, I don't know, Tony Saliba or Scott Nations or all these guys come in, Jack Schwager, the original author of Market Wiz, all these people come in to answer your questions out there. We can make them do it. So theoptionsinsider.com/pro. It's pretty fun. It's pretty cool, if I do say so myself. All right, that's going to do it for us today on the network. Thanks for joining us in the Pro, for all of you who hung out for the doubleheader. Thanks to all of you on the on-demand side who joined us for episode 2. Back again tomorrow, as I mentioned, for the option block in the morning, then This Week in Futures options after that, and then Friday volatility views, and then after that for the pro folks, options oddities. Then we're back again next Monday with the crypto rundown and episode 1 of the option block, all the way through to next Education Wednesday, another episode of Options Bootcamp. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.